Let's find some day trades, swing trades, and option trades. Hello, traders. It is Friday, July 24th. We're 2.5 hours into trading. We have had some market weakness, but you know that because I've been warning you about it. Yesterday, I released my weekly swing trading video about an hour and a half before the open. I told you, go to cash. Period. I've been saying that for about the last week and a half, been pointing exactly to this timeline, been telling you that as mega cap tech stocks announce earnings, that the air is going to get let out of the balloon. We have a lot of other influences that are weighing on the market. We have China retaliating. The U.S. is going to have to close one of its consulates in China. That's in response to us forcing them to close their consulate in Houston. This reignites some of the possible trade war tensions. We've also removed favorable trade status from Hong Kong, so that's weighing on the market. The coronavirus is spreading. So we have a lot of cities that are currently retreating back to phase 3. They account for about half of domestic GDP. This is significant. This was supposed to be a very quick recovery. The coronavirus is going to dissipate, wouldn't be a problem again until the fall. That has not been the case. So the government threw $6 trillion in stimulus at the problem. That stimulus is almost used up. Republicans and Democrats are haggling over the next $1 trillion stimulus plan, which by any standard would be gigantic, but it pales in comparison to what's already been done. So the market always wants more, and they're expecting this deal to get done right away. So hopefully there won't be a lot of haggling because the market will get very, very nervous. Next week we still have Google, Amazon, and Apple left to report, so the bid might be a little bit sticky right now, meaning that everybody's not ready to throw in the towel yet, but Microsoft reported, Intel reported, Tesla reported, Netflix reported. In each one of those instances, the stock sold off after the earnings report. This is a sign that good news is priced into these tech high flyers and that they may be overpriced. And the market rally has been very narrowly defined to healthcare and tech. So the jobs are in all the other sectors. Look at how many jobs there are in the hotel industry, restaurant industry, airline industry, industrials, financial sector. I can go on and on. Energy sector. That's where the majority of the jobs are. I think we're going to see a deterioration in job growth. Yesterday, initial jobless claims came in at 1.4 million. They were expecting 1.3 million. I think that's going to continue to tick higher, especially as the PPP runs out. You've got businesses running out of that stimulus. They're going to have to start laying off workers. So this is because the virus is continuing to spread. It's taken a lot longer than we had hoped. And even in China, who's been open since April, we're not seeing the robust type of V-bottom recovery that everyone was hoping for. You had retail sales up 1.8%, exports up only 0.5%, imports up only 2.7%. Those are not gangbuster numbers. Those are not robust numbers. So this economic recovery is going to take much longer than expected. We are seeing some credit concerns across the spectrum. You can look at consumers, going to be 23 million people possibly evicted from their apartments in October. 12 million of them did not pay their rent in May. So on a consumer level, definitely some credit issues and banks taking large write-downs. You can go to the municipal level, property tax collection. You can go to large metro cities like Chicago, I'd mentioned yesterday. No festivals, no baseball games, no concerts, 20% hotel occupancy, which they make a lot of money off of the hotel taxes and off the restaurants. That revenue source is not there. You can go to the state level. You can even look at the federal level. Our national debt is ballooning, and that's true across the world for other countries as well. Europe did announce a $2 trillion stimulus plan. It took them quite a while to agree upon that, but that is currently in place. As we're watching, you can see on the right-hand side of the screen, I've got the SPY. On the left-hand side, we've got the QQQ. So yesterday when I posted that video, I wanted to get it out before the open because I felt that the message was critically important to go to cash. Well, what happened yesterday on the open? QQQ rallied out of the gate. and made a new relative high. It made a new all-time high. SPY made a new relative high. Everything looked pretty good. Market kind of chopped around. Okay, here, yeah, we take out the low of the day, but we're in the dog days of summer, so the market's kind of chopping around, and then we take another stab at that relative high and we make a lower high. Okay, well, that's a little bit concerning. We've got this upward sloping trend line on M5 right in here. And you can see we get a bearish cross right in here on the 10P indicator, and that's all she wrote. Once that momentum settled in, we had a really big market drop. That was a 50-point reversal on the S&P 500 from that new relative high. This morning, boom, right out of the gate, market sold off. So we've had a nice little rebound in here, tried to get into the gap. We did at least get across the low from yesterday, but you can see how the prices have gradually been drifting lower. We had that 10P cross right in there. We had that upward sloping trend line right in there that was violated. That was our opportunity to get short right in there. And now we're continuing to drift lower. As this momentum starts to build steam on a Friday, we could see another one of these events where we see late day selling into the close. Let's go to that daily chart, see where our support levels line up. I've got this upward sloping trend line right here. That to me is the first major technical support level. It comes into play around the 315 level. So we'll see what happens there. Just below that, we have the 200-day and the 100-day moving average. The 200-day comes into play at about 303, but you can see that's been a pretty steadfast support level. My suspicion is that we're going to start testing this uptrend line very, very soon, possibly even today. I know that's a big move, but I think people are a little bit nervous with what they see going on right now. The economy is going to take a lot longer to get back on its feet, and with tech stocks not rallying after those earnings announcements, what the selling told me yesterday is that everybody's kind of looking at this window where you got tech stocks reporting and the bid should remain strong. So if I'm a seller and I'm trying to take profits, I'm not going to wait until Apple announces on Thursday after the close. I'm going to start exiting my positions now when the bid is still there so that I'm not left chasing bids and pounding bids when the market strength is gone. I want to get out when the opportunity is still there. And that's what this selling pressure right here tells me, is that we are seeing some profit taking already. There really wasn't a lot of news yesterday to justify this move. So be very, very careful if you're a swing trader. I know that the temptation is always to ask me in these videos, Pete, what do I do? What do I do? Do I buy puts? When I do these videos, they're really for swing traders. I do put some day trading ideas out there also. But when you have a market that has been in a gangbuster rally for the last 10 years, let's go to that monthly chart. That is a huge rally. Okay, yes, that's definitely a warning sign. But when you have that type of upward momentum on a swing basis, I can't in my good conscience tell you that you need to be short longer term on a swing trading basis with 0% interest rates. I just can't do it. On a day trading basis, you better believe I am shorting the market. But you have to be very, very, very nimble. You have to be engaged in the market all day long. You got to watch every tick, because 1 minute you could look like a hero and the bottom of the market falls out, and the next minute you could have a huge snapback rally. It could be news that the Fed's going to increase quantitative easing. Who knows what the news might possibly be, but the chance for a big snapback rally and a reversal is always there. So you need to be monitoring the market constantly to be able to short it, in my opinion, especially given all that strength. If you are a swing trader, there you can sit on the sidelines in cash. Don't fret that you missed a shorting opportunity. Just wait for the market to come in. Eventually, support will be established, and then you'll have an opportunity to go in, sell some out of the money bullish put spreads, distance yourself from the action, sell them below technical support, take advantage of time premium decay. We just came off of a run where we did not have a losing trade for 6 months, and we did about 4 trades per week on average. That's an incredible record. We're going to sit on the sidelines and we're going to wait for another one of those opportunities to set up. That's how easy it is. So right now, I'm going to look at a couple of stocks. And again, I have to repeat this. Swing traders, stay in cash. Stay in cash, stay in cash, stay in cash. I get so many comments on the YouTube channel. What do I do? What do I stay in cash if you're a swing trader? The stocks I'm going to show you set up well for day trading. And I hate to take such a hard line on it, but just given the number of questions that I get on this constantly, here's how I would look at the market right now. We've got a choppy sideways market. I do think that we're going to start seeing some selling momentum. I do think we're going to test the low of the day. My suspicion is that we take out the low of the day heading into the weekend. So I'm going to be favoring the short side. Stocks that I like on the short side, Lyft is one that I like on the short side. And I'll show you why. You can see here how we've got this 100-day moving average. We have this inverted hammer, this bearish hammer right there. That's a sign of resistance. Stock stays below the 100-day moving average. It's been weak relative to the market. I think this is a type of stock that continues to drift lower. Tesla announced earnings. You can see how it's starting to soften also. I don't know that I'd want to short it just because it has so much upward momentum. But on a technical basis, you can see this upward sloping trend line right in here has been violated to the downside. You had earnings right in here the next morning, yesterday when the stock opened. It ran up, gapped higher to almost $1,700, and then we had a bearish engulfing pattern. That's bearish. Got follow through selling today. I think Tesla's probably going to start seeing some weakness. We've got a doji right here in the middle of the range, so Tesla could set up well. Really, really choppy stock though. I think you've got to be a little bit more careful with that. Intel posted earnings last night. You can see how it gapped down through these major technical support levels and that horizontal support level right there at $57. I think Intel's going to continue to be weak. Now, one man's loss is another man's gain. Intel reported earnings, and you can see AMD is obviously biting into their business. There's a beautiful horizontal breakout. I think I pointed this out to you 2 days ago. But I had people asking me yesterday, I'm in Intel, what should I do? You shouldn't have done anything if you're swing trading and holding overnight. My underlying mandate was go to cash. So, yes, AMD looks really good. I think on a longer term basis, any pullback in AMD, especially down to this horizontal breakout, will probably be a good opportunity to snag that stock, especially if the market does come in the next few weeks. So, yeah, keep an eye on AMD long term. I think it looks good. AMAT, see what that's doing. I'm just going through my heavy selling list. That's all I'm doing right now. And I'm looking for major technical support that has been violated. Here you can see MU might be setting up for a good short. What do I do here? I'm going to click GTC. I'm going to click that candle right there. I click that candle right there. Now I've got an upward sloping trend line. If it's violated today, in a week, in a month, I'm going to get an alert. Now I like that because look, it intersects right here at the 200-day moving average. I think that would be a good place to short that stock. So yes, MU I think is setting up. It's not quite ready yet. And if it violates that uptrend line on a day trading basis, for sure I'll be shorting it and I'll be using that 200-day moving average as my stop. That's how we set the trade up. BMY, upward sloping trend line, down through the 100-day moving average. 200-day moving average was not able to hold. Yeah, I think BMY looks like a pretty decent short in here. By the way, you can see how the market's starting to sell off here. Long tails above body. Try to bounce it. Nope. Try to bounce it. Nope. Try to bounce it. Nope. continuing to drift lower. That 1OP indicator is continuing also to move lower. And look at that drop in BMY. Very, very steady, persistent selling. So yes, I think this one sets up pretty well too. Continue to go down the list. Microsoft had a rough day yesterday, and you can see double top, lower high, downward sloping trend line here. You can see that this breakout right here has now failed also. So I think you start seeing some weakness in Microsoft. There, I would say that you want to draw your trend line like this. Yeah, but Microsoft came out with good earnings. They had 13% revenue increase. Yeah, that's nice. But the stock is trading at a PE of 35. That is very lofty, especially for a 13% revenue growth. That upward sloping trend line, yeah, if it violates that, I think you've got a nice shorting opportunity coming up. SWKS, take a look at that. Nothing too interesting until that's violated, but there you have another upward sloping trend line. As I see them, whoops, did not draw that well, so I'm going to right click on it and I'm going to remove it. And I'm going to redraw that line because I want this for my own trading. Click there, click there. There's my upward sloping trend line. When it's violated, I'll get a pop-up alert. You should be setting alerts as often as possible so that when these important price points are violated, you get a pop-up, and then you're not having to look for trades. They're delivered to you. You're already doing the visual analysis, so you might as well drop the alert line. It takes you a couple of seconds to do that. So I like each one of these stocks. Now I'm going to do a little piece here. It's going to take me a couple of minutes on ECOM. You hear me talk about these bullish explosion alerts all the time, and we had one this morning on ECOM. So here's what we're looking for. These are alerts that pop up. It's a big green pop-up. You can't miss it right in the middle of Option Stalker. I know the average 20-day volume for every 5-minute increment for every stock. I collect tick data. I know when that stock has had extremely high volume that's accompanied by price movement, and that generates these pop-up alerts. So, oftentimes news related. Here, I like the fact that this stock, number one, has been a high flyer, got a really good head of steam. Number two, it's way down here, and all of a sudden it gaps higher, and it's gapped up through that resistance level, and it's been super strong all day. Well, we got that bullish explosion alert right in here. And so the stock started to pull back a little bit. You can see the incredible volume there. As it pulled back, it was able to hold the prior high of the day. And then I started to see the stock move a little bit higher and a little bit higher. And so we were all long this in, not all, but many of us were long this stock at about $20.80, 90 cents in that range. And I just took profits at $21.50, had my offer out there, waited for the stock to lift off. Now you can see it's retreating a little bit. It's a very, very volatile stock, really heavy volume, but that's how we trade these explosion alerts. This is not your classic. Oftentimes what we'll see is a lot of horizontal resistance, and this would be a much more classic example, just like on AMD, where you've got this horizontal resistance right in here, like this. And all of a sudden, you get this huge volume spike, and it breaks out through that horizontal resistance on major volume. And if it's a larger cap stock that you're familiar with, those moves are difficult to make, those big moves. So when you see those, that's usually going to be some type of fundamental news that comes out that bodes well for the stock longer term. The news hasn't even, it's just barely hit the news wires. Nobody's had a chance to even read the news or find out what it is. You're already on top of it because you've got these explosion alerts. One or two of these explosion alerts, you get on these, they'll pay for Option Stalker for a year. Option Stalker Pro for a year, in fact. So, yes, I think ECOM was a really nice looking stock early. Yeah, AMD looks good longer term. I would wait for a pullback. I'm bearish on the market right in here. I think we're going to see some profit taking, so I would not go in, rush into it, and buy it. There are a couple of other stocks that were interesting to me on the long side. One was TSM, another nice breakout there. And another one was TGT, which I would stay the heck away from any retail stocks. But today, TGT actually looked pretty good. Forget that I even said TGT because if any of you try and swing trade this, it does not look good. It's got to get through this horizontal resistance level at about $126, but it was a nice day trade for me today. So that's all I've got for you. I'm not going to be doing a video Sunday night. I'm not going to be doing one Monday morning. I'm going to be taking a little bit of time off. This is a great time of year to take some time off. These are the doldrums of summer. We've got really nice earnings next week. Earnings are going to climax next week. We'll also have major economic releases coming up over the course of the next week. So once that news is out and once we go into August, things grind to a halt. And I mean, it gets super quiet. So try and schedule some time off, spend time with your family, your kids before they go back to school, and try and enjoy yourself because if you're watching the market, you're going to be tempted to trade. And I found through my past research that when I looked at my trades and the market was dead flat, I ended up trying to make something happen and I ended up giving money back to the market. That's never a good thing. So take some time off, relax. We are going to have a super busy fall session. So I will be back. I will be doing some videos on Tuesday. I've been trying really hard to get a video out on common trading mistakes. Hopefully I'll be able to get that out in the next few days. But favor the short side if you're a day trader. Watch for additional momentum today on the downside. I am going to be looking for some option lottery trades. The ideal setup for me would be weakness, a new low late in the day, a little bit of a bounce into the close, and an opportunity to buy some out of the money bearish puts on stocks that have been particularly weak with the thought that we close on the low of the day. Now, this is all conjecture right now. I don't have the technical patterns to tell you that that's exactly what's setting up. At this point, it's just a suspicion. Step number one, we have to get through the low of the day. Step number two, we've got to see some long red candles stacked one on top of the other, just like this. If we start to see that, the momentum will build and buyers will back off. They will not want to buy heading into the weekend with a lot of news pending, coronavirus news, protests, whatever the news is, China tensions, they're going to err on the side of caution and not be bidding, even with big earnings coming next week. So I think we could hit a little bit of an air pocket during the summer doldrums, light volume, and you could see a soft patch just like that, then I'd be looking for a rally, a little bit more organized than that. And that little spike in the last hour will give me an opportunity to look for stocks with relative weakness and to buy some puts that are just out of the money that have a chance to go back in the money. And then when the market finishes on its low, that stock will drop. Those options will start to trade in tandem with the stock. So the delta will be one, and I'll be able to take my profit. So I don't want to pay a lot for those trades. We try and do them on expiration Fridays. We try and buy them for 10 cents, sell them for 20, 30 cents. So I think that opportunity might be out there for us. If you like this content, please give it a thumbs up. Please make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss any of these videos. Thanks so much for watching. Have a good weekend. We will see you Tuesday morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.